So we got a good question in the comments that actually is kind of playing off to what we were talking about earlier with housing prices and monetary premiums. So the question is, whatever happened to work hard and save for 10 years for a down payment on a house and then keep working hard for 15 to 20 years to pay it off? We're tired of hearing kids cry about home prices. Get out and work. So this is a great question. And I think it really helps to understand the, just perils of inflation. So we go into a Fiat standard in 1971. Gen Xers are late 60s, early 70s, boomers 50s, 60s. I was born in 79, so I'm like a late Gen Xer, early millennial on that crossover. So the boomers have definitely benefited the most from what's called the Cantillon effect, which is basically the entities or the people, businesses closest to the money printer, getting money directly from the Fed once it's printed, sometimes at 0% rates, right? Then get to lend it out and use it to accumulate more assets and money, et cetera. So the rich get richer and the rest of us sort of flatline or get poorer because of this, because we're, cost of money for us is much higher down at the bottom of the pyramid. And so let's just take, actually, I definitely want you guys to weigh in here. I want to take a quick look first at some of these charts. This is where I go when I want to talk about what has happened, basically the societal outcomes of inflation, right? And so your name who asked this in the chat, you've probably seen this before. If you haven't, go to WTFhappenedin1971.com. And you'll see the inflection points in all these charts that track social metrics, metrics about the health of a society or an economy. And you can see these inflection points, real wages. Here it is going up in lockstep from 1950 to 71, which is when Nixon took us off the gold standard, defaulted on the dollar. And you can see that basically the wages of lower income, the lower 20th percentile and the median kind of flatlined, 95th percentile continued to rise. So if you had assets, right, and were able to start accumulating assets before or soon after our move to a fiat standard, right, then you are able to carry those assets forward, including buying a home. And saving up and buying a home was much easier at that time. And the monetary premium that goes into the houses drives up the housing cost above their utility cost, and puts housing out of reach for people who have already been suffering under the ravages of a fiat standard, decades into it, basically. And so the boomers, the Xers, the millennials have all, had it a little bit easier than even the subsequent generations. And it's going to be harder and harder as it goes on and as we stay under this fiat standard. So I don't think it's like a generational thing. Like these kids just don't want to work. They're lazy. I don't think that's what it is. I think they're in a much more objectively difficult economic situation to do something like save for a house, buy a house, and pay it off.
I brought this up a few weeks ago on Swan Signal, but I feel like this is a good opportunity to kind of bring this point back up. But if you actually allocated the same amount that you would have in 1971, 1975, or even 1985 in gold instead of a home, the appreciation in the value of that gold would have appreciated far greater than the appreciation of the house, which I think, again, further signals that this is not a housing issue so much as it is a monetary issue, and the fact that the value of the US dollar is declining in such a way that it's making hard assets appreciate, and different assets are appreciating faster than others.
And the other thing to also think about, I'm a millennial, fortunate enough that I was able to find the home I want to be in long-term, lock in a 3.25 interest rate, but a lot of my peers didn't get that. And so now the asset price is still elevated, right? So it's still high. And now those rates are more than doubled. And let's say Jay Powell cuts rates because Trump keeps pressuring him. And so maybe mortgage rates come down a little bit, but that's going to do the asset price, right? It's going to continue to go up. And so it's just going to exacerbate the problem. So there is kind of two economies. There's the economy of those that have assets and those that are trying to obtain assets. And if you look at just consumer studies, like those that make over $250K a year, it's less than 10% of the population, but that makes up 50% of the consumer spending. So there's a small cohort that basically is keeping the economy afloat. So if you think about the US, the consumer, right? Trump's talked about that with tariffs. Like the U.S. consumer is this huge market that everyone wants. And then the last thing, there's a spot from Fortune that was recent. I'm just going to read it because I knew I had seen it somewhere. 58% of recent Gen Z grads are on the hunt for full-time jobs still, which is a contrast to just 25% for earlier millennials, Gen X, and baby boomers at the same stage of life. So I think what's also happening is you have AI coming in, and you have someone that went through a 4-year degree, has a ton of debt, and now that job is going to be obsolete in like 2 or 3 years, and they had no idea that was coming. And so I've talked about this with parents of kids that are much older than my kids, right? If they were a 16, 17, 18-year-old child, how do you best prepare them to go into the world today? What jobs should they go get? We can talk about blue collar jobs. I would vote and say, yeah, skilled trades. I think that's an interesting spot. What's AI proof? But it's a really challenging environment. I would agree with Brady. Are there really unmotivated Gen Zs and millennials? Yeah, there's some lazy pieces of, people there. Are all baby boomers evil and hate their kids and going to spend all their money? No, I think that's unfair as well. But there are those that are spending all their money on a worldwide cruise forever and are going to spend every last dollar. So it's hard to say like this generation is X or Y or, doing something that's good or bad. But what we can say is homes are as unaffordable as possible. And it is really, really tricky to be a young individual if you didn't already have some assets or were blessed with parents that can give you some help.
Yep.
To pull yourself up by your bootstraps, real tricky right now for those folks.
Yeah.
Especially if you're a coastal elite like John and I are.
Yeah,
move to the Midwest, and it's a lot easier.
And it's just growing up in that environment too, and like entering, leaving the home and going out and trying to find your way in an environment where it's really stacked against you because you don't have assets, you've got a lot of debt. The assets are owned, by the older people, the richer people, and it's just harder and harder under fiat standard as the decades go on to try to keep pace with those who are benefiting from the money printer earlier on in the the transition to fiat. John, did you have something?
Yeah, I love Q's point. We have 2 coastal elitists on the show
true.
here and 2 Midwesterners. So that is.
Thanks for not saying flyover states.
Right. That's right. If we really wanted to dig at you, that's what we would have said. Did you guys see, great points by all you guys, by the way, did you see a tweet that I don't think I posted it in our channel. I did actually post it a few days ago myself, but it was one of these that the algorithm no likey. And after like, I'm sure you guys have done this. After like 15 minutes, it's got like 50 views and you're just like, all right, this one's not going anywhere. I thought it was a banger, but I'm deleting it. I'll post it again next week or something. There was a tweet where the guy looked at the numbers of what was the minimum wage in 1971. This is the key year that Brady was just looking at. Minimum wage was $1.60 an hour. The gold price at that time was $35 an ounce. If you worked 40 hours a week, that is $64 a week. And if you look at that in gold terms, it's a little under 1.83 ounces of gold per week. What would 1.383 ounces of gold per week be today? Gold is like $3,400 an ounce. It's over $6,000 if you got that money paid in gold, right? What is minimum wage today? It's $7.25 federally. A lot of states and cities have higher, but let's just go with that. 40 hours a week at $7.25 is $290 a week.
That's insane.
It's insane. And what I think is really interesting about this one is that this was in my banger tweet, which will come out next week. Everyone stand by. I think this is like the ultimate Rorschach test of if you put those stats in front of someone, it sparks like every debate imaginable because it's like gold, minimum wage is involved, highly contentious issue. Is CPI the right measure of inflation? Fiat versus sound money. Immigration is a factor here and like its effect on wages. Wage earners versus asset owners. And then lastly, like the most explicitly political thing, the 1971 act of suspending gold convertibility was a presidential action done by Richard Nixon. So like, he's just a controversial figure. I feel like if you want to understand someone's worldview, you tell them the stats that I just went through about 1971 gold minimum wage, ask them to respond. You will know everything about that person's worldview within like 90 seconds.
Fascinating.
Yeah. And lastly, fun little thing. If you're ever talking to someone who actually defends fiat, not like someone who doesn't understand, someone who genuinely is like, oh, fiat is a great system, blah, blah, blah. Say to them, be like, oh, you must be a huge Richard Nixon fan. Like he must be your favorite president. That usually throws them for a loop. It like, you know, just their brain starts to malfunction.
You made it all happen, guys.
John is just dropping ways at parties talking about, you know, the 10-year yield. Now this with, I mean, geez, hit.
You guys got
everything you got.
So good. Thank you to Mara for securing the Bitcoin network, making it the most secure monetary network in the world on this planet, and also for helping to support the show. Let's see. Also check out Swan IRA. We have an IRA service. You can, you know, your Swan Private rep can hook you up with that, or you can just self-serve into it as well. And it's a great way to grow your, you know, retirement, your Bitcoin tax-free. Really simple setup. We also have Swan Vault, which is a collaborative multi-signature cold storage, advanced Bitcoin cold storage made simple. That's at swan.com/vault. And that's it for this week. Yeah, we'll see you all next week. And, you know, take care. Stack those sats. Buy that dip.
Peace. Thanks, everyone.